The Indian market starts strong but gives up some of its early gains as auto, private banks and pharmaceuticals see selling the mid-caps underperform. That index down over 1%.
Tech Mahindra appoints former Infosys President Mohit Joshi as the successor to CP Gurnani as MD and CEO. Stock surges over 8%.
The Reserve Bank of India has approved the extension of IndusInd Bank's MD and CEO Sumant Katpalia's term by 2 years, even as the bank asked for a 3-year extension, as a result of which the stock lower by 6.5%.
The Adani Group repays $2.15 billion worth of share-backed financing ahead of the deadline. A $500 million loan taken from the acquisition of Ambuja Cements is also paid back ahead of time.
Nazara Tech tells CNBC-TV18 that two of its subsidiaries, Kidopia and DataWorks, have exposure of about 64 crore rupees to Silicon Valley Bank. Clarifies that the subsidiaries have sufficient working capital and says that the statements by the regulators give them hope of recovering the full amount. Hello and welcome. You're watching us here on Chartbusters. I'm Manglam Malu. With me today is Ekta Batra. We're not doing particularly bad for the market given the sort of concerns that we had over the weekend. Some soothing commentary coming in from the regulators that there has been a backstop to the SVB bank crisis led the Nifty to move higher at the open. But thereafter, we had some bit of sell-off come by and the mid-cap index as well as the Nifty bank underperforming, as a result of which we've given up most of these early gains. So let's see where we go from here. Hi, Ekta.
Hi, Manglam. Yes, absolutely. We have the broader markets which are a bit sluggish at this point in time. So it's good to see that the Nifty and the Sensex are at least consolidating. And there's no sort of sharp reaction to all of the headlines that have been making news globally. The mid-cap index currently down around 1%. We have the bank Nifty, which is just about flat at this point in time as well. We have a lot of ground to cover in terms of stocks as well as news, which is lined up in the next 30-odd minutes. So let's get to our first management on the show. IRB Infra saw a 26% jump in toll collections in the month of Feb. It has also recently received a letter of acceptance for an NHAI project in Gujarat, which is worth over 2,100 crores. We have Tushar Kavedia, who's the Chief Financial Officer at IRB Infra, joining in to discuss all this and more. Mr. Kavedia, hi, thank you very much for taking the time out. Well, I'll start with the toll data for the month of Feb. Like it is mentioned, it is up 26.7% on a year-on-year basis, but on a month-on-month basis, there's been a decline of around 6-odd%. Can you take us to the details of the toll data for the month of Feb and what the nuances were?
Sure. So, if you see on YOY basis, the growth is almost 27% for us on the toll collection. And if we look on the month-on-month basis, the collections have improved for us. February month being a 28 days month, and if we compare on a monthly collection or a daily collection with January month, it is higher by 4%. So there is no decline as such. The number of days are lesser in the month of Feb, and henceforth, and because of which it looks slightly lower, but otherwise it's higher by 4% for us.
All right. And what's the outlook for, we're midway through March, almost 13 days up. How has that been? And from April, you have some rate hikes coming in as well. What could the toll price hike be and what kind of traffic growth are you penciling in?
Sure. So if you see this quarter itself has a high commercial activities going on, and that is leading to the higher growth on the revenue collection as well. We have seen a higher indirect tax collection also. So this all proves that the higher commercial activities will be there in this quarter, and this month is also seeing a good growth in the toll collection as far as if we compare with the on the last year basis. For the next year, most of the projects, NHI projects, have the tariff hike due, and we expect around 5% kind of tariff growth for all the projects under NHI. And in fact, the traffic we assume around 5.5 to 6%. So overall, on a CAGR basis, we believe 10 to 11% of revenue growth is quite comfortable to be assumed for the next year.
Okay. Your Ganga Expressway project, how much is it possibly expected to contribute on a quarterly basis?
So as we discussed earlier also, the project has received the appointed date in the month of October, and the progress is going quite well for us. The project is contributing the highest construction revenue for us as of now. And with the timelines, what we have to construct the road within next 2.5 to 3 years, the quarterly contribution by this project will be somewhere around 500 to 600 crores on the construction front.
Right. And what about the opportunity coming in from the NHAI project that you've got right now? What 2,300 crore worth project, which is you've received the LOA, 2,130 odd crores. By when does that come on stream? What's the revenue potential? What do you foresee from here?
Yeah, so this project is a NHAI BOT project in the state of Gujarat with approximately 91 kilometers of length. We have already received the LOA, and we are in the process of achieving the financial closure for the same, which we believe could be achieved in the timelines given to us. Post receiving the appointed date, which is approximately next 6 months, we have to achieve. In the post that, we will commence the construction as well as the collection also on that particular project, and this project will start contributing to our construction revenue from this year itself.
So, what do you foresee in terms of construction revenue this year? Last time you joined us, you said 4,800 to 5,000 crores is what you're expecting from EPC in the next year. How much was this baked in already or not? What's your revised outlook there, if at all?
So if you see, we have already discussed about the order book which we had earlier before this project, and with the basis of that order book, we were expecting around 4,800 to 5,000 crore for next year. With this additional project which we have back, the revenue should be in the range of 5,000 to 5,500 crore for the next year.
Okay, so that was in fact my next question. But nonetheless, let's talk about net debt then. That stood at around 1,500 odd crores as per our last conversation. Based on the number of orders that you're anticipating going into next fiscal as well as your toll collection estimates, what are you planning to do in terms of your balance sheet?
So if you see, our net debt to equity is quite comfortable for us. It is below 1, around 0.8 as of now. And as we don't have any plan to raise debt at the parental level, the debt will be only at the project level. Today, our net debt stands at around 10,200 crores. And in next 2 years, we will see a repayment happening as per schedule in the projects. And basis that, the net debt to equity for us will further improve once these repayments are being made in the projects going forward.
All right, Tushar, finally, before we let you go, just give us a couple of numbers. What kind of order inflows are you expecting in the remainder of this fiscal? We have about 17 days to go for March as well. Outlook on order inflow for the next fiscal. And at the same time, how much will go out of your books and go into IRB InvIT?
Yeah, sure. So if you see the order book today, we stand at 9,700 crore in EPC and overall 20,800 on the totality basis, which includes the O&M order book as well. We expect another, because our target is to at least have a order book increase by 20% whatever we have consumed for this year. So around 5 to 5,000 crore is the expected increase in order book for this fiscal, out of which we have already achieved for around 2,000 crores. Maybe in the available pipeline, we can see at least 2 to 3 projects worth of 4,000 to 4,500 could be bagged with the available opportunities coming right now from the NHAI side. For the next year outlook, we have already discussed about the construction revenue should be in the range of 5,000 to 5,500 crore, and we are comfortable in achieving with the existing order book what we have today.
Okay, all right. Quite an optimistic outlook, I would say. Thanks very much for joining in and speaking with us. So that's IRB Infra. The stock is down around 1% at this point in time. Well, for the markets, the Nifty is in the green, higher by around 26 odd points. We have the mid caps, which are still underperforming with a cut of around 1%. Well, let's shift focus to our special segment where we will get you a few ideas for profit from Money Control Pro. We have Nandish Shah of moneycontrol.com who's joining in now to talk about a stock that he's tracking very closely this Monday morning. Nandish.
Hi, today's ideas for profit is Vesuvius India. Vesuvius India is a subsidiary of the Vesuvius Group UK, which holds 56% stake in the company, while institutional investors hold more than 25% as on 31st December. VIL is a leading metal flow engineering company and it supplies high-performance refractory material to the steel and other process industries. VIL's market share is nearly 12% in the Indian refractory market. December 22 quarter performance were in line with our expectations. Revenues, EBITDA, and net profit grew by 35%, 96%, and 110% respectively year on year. The company has announced a slew of capex in the last 6 months. At Vizag, VIL plans to invest 57 crore in phase 1, which is likely to get commissioned by early 2024, while additional 100 crore is likely to be invested in Kolkata and Vizag. Further, in the month of February 23, VIL intend to invest 500 crore in the next 3 to 5 years in order to cater to the growing demand for the refractory material. India is likely to witness doubling of steel manufacturing facility from 150 million tons currently to 300 million tons by 2030, and VIL is likely to be the key beneficiary. Net cash and cash equivalent as on 31st December is nearly 17% of market cap, which would further boost valuations. We have revised our projections for CY23 and CY24 post the result, and VIL is currently trading at 20 times CY24 earnings. VIL has corrected post the result, and we remain positive on the stock.
Nandish, thanks a lot for that. With that, we step to a short break. On the other side, we get the management of Green Panel up for you. The CFO, V. Venkataramani, joins in. Welcome back. As promised, let's get chatting with the management of Green Panel Industries. We have with us V. Venkataramani, who's the CFO of the company, joining us. Thanks a lot, Mr. Venkataramani, for joining in. You know, the third quarter was a bit of a problem with regards to domestic volumes and export realizations on the MDF business. Just wanted to understand how the fourth quarter so far has panned out. Have we seen some sort of improvement from what the situation was in December? And what kind of projections can you have for this quarter and the next year?
Good morning. The third quarter, as you mentioned, was impacted by lower domestic volumes. We saw degrowth of around 7% in domestic volumes and significant drop in export realizations. And there was also one more significant factor. We had suffered significant currency losses of approximately 17 crores in the third quarter. So if you look at Q4, I think we should see better volumes in the MDF business, although the growth proportion would probably be in export volumes, which is not a very profitable business for us. And but I think the markets are, holding up quite well considering the significant increase in import volumes.
Okay. So what would that mean, sir, about for your MDF realizations? Because in the previous quarter, your domestic realizations were higher by around 10.5%, but export was down over 11%.
That's correct. So the domestic realizations are still holding up. There's not been any cut in domestic realizations, although we have seen some further fall of approximately 5% in export realizations. But domestic realizations are holding up since, demand has been good even in the current quarter.
So net, are we expecting lower realizations in Q4?
No, as far as the domestic business is concerned, realizations will be flat.
Right. So, no, just wanted to understand, the fourth quarter, you said volumes will be led by exports. So if you could give us a sense, in the third quarter, 78% of your volumes were domestic, 22% was exports. You said that exports have lower realizations. We've seen that as well, and that has declined by 5% further. So what kind of volumes are you targeting in the fourth quarter? How much of that would be export-led? How much of that would be domestic? And what would the blended realizations quarter on quarter look like?
So if you look at Q4, we should be doing volumes of approximately 135,000 cubic meters, and the mix should be somewhere around 70% domestic and 30% exports. And like I mentioned, domestic realizations will continue to be flattish, and export realizations have seen further fall of approximately 6%. So I think that will have some marginal impact on blended realizations, although I'm unable to give you the figure right now. But we will see a small drop in blended realizations.
That do to your margins as a whole?
Excuse me?
What would that do to your margins, sir? You did around 25% in 9 months. Are you expecting lower margins, possibly because of maybe flattish realizations?
Yeah, we should see slightly lower margins in quarter four. So due to two factors. One, the export mix is higher in this quarter as compared to quarter three. Quarter three, I think, was about 79% domestic and 21% exports. Whereas this quarter, we are expecting about 70% domestic and 30% exports. And there's been further increase in raw material costs, which we have not been able to pass on. So there would be some impact on EBITDA margins.
So what does all of this do to your FY24 guidance that you had given, 10 to 12% domestic volume growth, or rather overall volume growth with 24 to 25% margins? Because just after Q3, you gave the FY24 guidance. Thereafter, you've said that there has been some more pressure on input cost side. So do we see further downside to your FY24 guidance right now for both volumes as well as margins?
I think we should do volume growth of about 12 to 15% next year. And maybe, margins should be around the same levels as the current year. Where overall, I think we should have EBITDA margins of around 25, 26% for the MDF business. So we should do a similar EBITDA margin next year with, higher volumes in both domestic and exports.
Just quickly before we let you go, just two numbers I wanted. What's the capacity utilization you're targeting next year in both MDF and the plywood business?
I think we should be doing about 84, 85% capacity utilization in MDF and approximately 80% in plywood.
Okay. All right. So we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Green Panel. We need to take a short break, but here's a quick programming note. Tomorrow on the 14th of March, CNBC-TV18 will be hosting what will be India's largest summit on gender parity in Delhi. Women leaders from all walks of life will come together to brainstorm and help take decisive steps to bridge the gender inequality that exists in India and across the world. The event starts at 4:30 p.m. tomorrow, and you can catch all the live action. Welcome back. Well, it's definitely a rougher ride for the broader markets. The Nifty is currently just about higher by around 20 odd points, not doing too badly currently for the Nifty. But in terms of a couple of specific stocks, we have IndusInd Bank, which is your top loser on the Nifty, down around 6.5 odd percent. We have Infosys, which is following suit. So that one is down around 1.5%. So there has to be a little bit of a dichotomy, which is really taking place within the IT space. Infosys loss really is TechM's gain. TechM is up around 8 odd percent at this point in time. IndusInd is down, but we have ICICI Bank, which is higher from the financial space. Talking about other sectors, Apollo Hospitals is not doing too badly today, so that stock is up around 1%. We have HUL, which is from the FMCG space, which is also managing to hold its head above the water, so up around 0.7% currently for Hindustan Unilever as well. Well, on that note, we need to wrap up on Chartbusters. Thanks very much for watching. Trading Hour up next.